A very good afternoon. And in the last penultimate panel discussion of this mortgage finance leadership conclave, so the topic for this is affordable housing, one of the key component of mortgage finance. I mean, affordable housing as a concept is not very old, it's relatively new. Say last 10, 15 years this has come up. And the overall mortgage market in India has a huge potential because if you see the mortgage to GDP ratio in India, it's only 11%, much lower than some of the developing countries and also the developed countries. Affordable housing got a big boost in the last, say, 10 years or so with the credit link subsidy scheme, which was announced by the government, I think, in 2015. The scheme ended last year, but it was known as a game changer. So to discuss some of these issues around affordable housing, we have a stellar panel today. Let me start with the theme of the discussion, which is how affordable is affordable housing? And is there a need to look at the definition to start with of affordable housing, which is like 45 lakh per unit. So if I can request Mr. Adhikari to start the conversation on his views on whether we should need a relook for the definition of affordable housing.
Yeah, good evening everybody. Yeah, Manojit, I personally believe there is a need to have a relook. As you rightly said, there is a cap of 45 lakhs to define affordable housing, and I think also there's a carpet area cap, if I am not mistaken, 60 square meters in the urban conglomerates or the 7-8 big cities, Bangalore, Mumbai, Delhi and others, and 90 square meters in other areas. So the basic issue, I believe, I think we don't need to have two such things, because again this limit of the amount of 45 lakhs, I do not think it works in big urban conglomerates like Mumbai. Yeah, so okay, 60 square feet is the upper limit in Mumbai, but I don't know whether anybody could purchase a house, and as somebody was saying, people now after COVID are asking for bigger spaces. So what would you get for 45 lakhs of rupees in Mumbai? So I think if at all the government needs to have a relook at it, it should be defined to the size of the dwelling unit. So the rates could be higher in Mumbai, they could be lower in a city like Lucknow or Jaipur or elsewhere. I think that would make it more equitable and fair. And I think more the kind of people we want to come into this affordable housing, the EWS, the LIGs, the MIGs, which was defined in the CLSS, earlier CLSS scheme of the government, I think it would be fair to them. Otherwise, in a city like Mumbai, I don't think anybody could the sort of intended class could get a house at 45 lakhs in a city like Mumbai.
Right, so
I
basically...
believe it should be limited to the dwelling, size of the dwelling unit, immaterial of the cost.
Correct. So basically you are talking about different limits for different geographies, depending on their...
See, one size fits all kind of a scheme does not work.
Does not work.
Yeah, because of the different geographies in India, the land costs, the construction costs and other things in different areas are different. So I don't think a one shoe size fits all will work in affordable housing. I think we could make it more inclusive if we slightly made it more relaxed by removing that the cost component of the definition.
Right. Mr. Sridharan, what is your view on this?
Firstly, thank you for having us, and thank you to all the audience for staying back, even though Mr. Parekh is gone. I would have left. But I'm really glad that you decided to stay on and listen to us. All right, on this thing of definition of affordable housing. See, I'd make 2 or 3 points. One is the definition was created back in 2016, right? We are 7 years on now. House prices have gone up on average about 5% in this 7-year period. Which essentially means overall house prices are up about 40% in this period. So that 45 lakh automatically becomes like 65 lakhs. Like do nothing. Just a simple inflationary move, means that 45 is today worth 65. So if 45 was the relevant number at that point, 65 should be the relevant number at this point. Like you don't need to overthink this, right? That's so I just feel like some of these numbers, which are absolute numbers that get cast in stone, don't adjust for the fact that India is an inflationary market. So numbers keep increasing over time. So that's the very at a very basic level. The second point I'd make is it's important for us to drive some simplicity in this. This is a very learned audience. People here are all related in one form or the other with the mortgage sector. But let me offer this. If I were to just stand up and ask everybody, okay, just define what is affordable housing according to the government of India, what percentage of people do you think will be able to actually define what the actual definition is? It is hard. It's complicated. There is some cap, there is a metro versus non-metro difference, there is some area thing on top of that. Areas defined in square meters. Whoever measures houses in square meters, like, I don't even know what my house measures in square meters. Like, we have all this complexity inherent in the definition of affordable housing. It's almost made it inaccessible to broad audiences. I think there is a need to simplify it, to make it to make it a more kind of viable and widely known definition. Mr. Adhikari is super learned man, and he's kind of runs one of the largest housing finance companies. He can rattle off what the definition is. I bet you 50% of the audience will not be able to rattle it off, including myself. So it's hard. There's no necessity for something as basic as a definition of a segment to be this complicated.
Correct. So simplifying the definition. Would you agree, Mr. Subramaniam, on this?
Absolutely. I think if it was 45 in 2016, clearly the same house was 45 lakhs in 2016. Would be not even 65, would actually be closer to 1 crore at this point in time. So if the benchmark, to my mind, should not be a standard benchmark. It should actually be a benchmark which moves with certain parameters. You build in inflation, you build in some other things, and just let it automatically move up. It was 45 lakhs in 2016, it was 49 in 2017, 57 in 2018. Multiplied by inflation, the way you calculate capital gains tax, just calculate the increase in the benchmark, and then make that as the benchmark for affordable housing.
And there are more definitions. For example, the low income group, middle income group. I mean, what is the view? I mean,
but if to add to the definition of affordable that he said, which half the people here would not be able to understand, half the people would think that the 10 to 15 lakh segment is affordable. Half the people would think that it's a subprime lending which is affordable. Anything which is given to a customer who is suboptimal or who's defaulter, etc., that is affordable. So that hundreds of definitions. I think the word affordable is actually a little bit of a misnomer at this point in time.
Mr. Rege, do you think, apart from looking at the definition of affordable housing, we also need to relook the way the low income group, middle income group, those are defined?
Yeah. So again, like Jairam said, thank you for having us. To add to the complexity that Jairam mentioned, I think as far as CLSS is concerned, they will call it LIG, EWS, LIG, MIG, which is more on income rather than even cost of the apartment or area, right? So that adds another layer of complexity. I think I agree with all the panelists that there is need to simplify it. As a housing financier, the opportunity is much more if the affordable ticket size goes up above 45 lakhs to 65 lakhs. But I'd also like all of us to reflect on how the government or the regulator looks at it, right? Out of the 30 lakh mortgage market in the country, only 10 lakh crore is above 75 lakhs ticket size, right? 10 lakh crore is below 25 lakhs. And about 10 lakh crore, so below 25 is 10 lakh crore, 25 to 50 is 10 lakh crore, and above 50 is 10 lakh crore, right? So if you are saying that above 50, right, which is only 33% of the market, there is still room to kind of call that affordable, then you would be leaving out a very small segment which would then not qualify for affordable housing, right? Increasingly, all of us know that the regulator, NHB, in all its interactions is very keen that the focus of housing finance companies should be on smaller ticket loans, right? Yes, we do a lot of 20 lakh, 30 lakh, 40 lakh loans, but nobody is doing as much below 25 lakh, right? And that's where there is a lot of pent-up demand for which they want to cater all their schemes and incentives so that you cater to that segment, right? So I'll just leave that thought on the table. But in in terms of simplifying the definition of affordable, harmonizing it across, housing affairs, regulation, RBI, all for it.
Right. I think there is almost a uniform view about the definition of affordable housing, how it needs to change. So, Mr. Doraisamy, I would like to ask you, the CLSS scheme, as I mentioned in my opening remarks, was hugely successful. The government announced, not announced, but mentioned something about urban housing. Do you think another version of CLSS, the CLSS 2.0, that kind of thing is extremely required at this point in time to boost affordable housing?
Well, thank you for having me here. Yeah, I agree with you. CLSS scheme was a huge success, largely because of the incentives that they gave out, rather than structurally how it was intended in the first place. As Jairam pointed out, CLSS was also another scheme which had a lot of complications built around it. A customer walks in and he says, I wanted to buy a house here. You can't tell whether that house or that project in that PIN code qualifies for CLSS or not. The PIN code in the previous street will qualify, in the next street will qualify, this may not qualify. So you got to scatter around and find out whether it fits into your database or not. But yeah, I hear that there is a scheme 2.0 coming in, but I think it needs to address fundamentally the drivers for getting people back into affordable housing, rather than giving a 2.5 lakh incentives and monetary incentives, because that will set a wrong behavior both from a financing side as well as from the customer side to buy affordable homes.
Right. Mr. Sridharan, would you like to add on that?
See, if you look at semi-urban India and the upper end of rural India, and you look at how housing ownership was 10 years ago and where it has gone now, it is clear that Pakka housing has increased significantly. At Piramal Finance, we do an annual off-site type thingy, and last week we went to Banaras to do our off-site. And one of our colleagues went to his village, which was a few hundred kilometers away from Banaras. He went there for an evening and came back. I asked him the next day, what do you see different? Is there anything different in your village compared to what it was like, when you were growing up? And he said, you know what, like the center of the village always had Pakka houses, but the periphery of the village, where we don't like talking about it, but let me put it out there, some of the lower castes live, it was always kacha housing. Right? It was always mud houses all around. And he said, I went around this time and I was surprised to see that everything has become Pakka houses. And if you ask around in that population to say, how did Pakka housing come in this place, you will find that a significant proportion of those people have used some version of the benefit schemes that have come out, whether it is Pradhan Mantri Awas Yojana or some other form of like the CLSS schemes, etc. They have had a societal impact for sure. Now, whether it has been good for business or not, whether it is sustainable economically or not, I'm not getting into that argument right now. Whether it has had a positive societal impact, absolutely yes. There is no question about it. Anybody who has gone to villages and some of the smaller semi-urban areas in the last 10 years will vouch for it. The question is that societal good enough? And is that societal good sufficiently important for it to be a big enough priority for a country which is trying to reduce fiscal deficit? That's for the government to decide. But if you simply ask me, is it good for the citizens of the country? I would say yes, it is. Right.
Mr. Rekeb, the finance minister did announce specifically that the aim is to add 2 crore houses in the next 5 years. What is your view on this? What are the main challenges in doing so? And do you think the budgetary allocation for this is sufficient?
So, I think there has been a lot of talk about CLSS and PMAY-U, which is Pradhan Mantri Awas Yojana Urban. There is a scheme which is currently running called Pradhan Mantri Awas Yojana Gramin, right? Yes. Where basically the government, for all this Kacha to Pakka transformation, gives people or population something like 1.2 to 1.5 lakhs as stage-wise. They are almost playing the role of a housing financier, saying that if you are doing this transformation, I will give you 1.5 lakhs, right? So, in that sense, the Grameen scheme probably more out of just, whether it's economically viable, whether private financiers can do it, whether it is our role, at what price would we do it, versus the government doing it as a societal good, is for the government to decide. But a lot of that has happened, and as housing financiers or mortgage professionals, we would only encourage it.
Right, right. In case the government comes up with an CLSS 2.0, what will be your suggestion to the government, Mr. Adhikari, your feedback in terms of the contours of the scheme? Can you tell us a few things?
Well, difficult advising the government on what to do. The government does what it has to do. Yes, on the CLSS urban, if I understand, if I've got my data right or the facts and figures right, some 76,000 crores of outlay has been announced in the budget, of which 54,000 is for PM Grameen. So what is left for the PM urban is probably 22,000 crores of rupees, which again, going by the need is less, but okay. I will not contest that because that is for the government to decide what it wants to spend. The other thing is, of course, the cost at which this finance is going to come to us housing companies.
Right.
Right, because right now, yes, you must understand that there is a subsidy to the borrower and there is a reduced cost to the lender. But of course, inherent risks are involved. As it is a risky industry. So we as an industry, we have to add on to the sort of risk costs to it. So of course, one of it is going to be what rates are we going to lend it on, how much of the lower finance costs are we going to be passing it on to the borrowers. So that would be one. Yes, the definitions, as Jairam says, 100% agree, too complicated. Well, Jairam, I'm not a learned person. I just read about your thing on the way back from the office to here. So yes, too complicated, right? You have these EWS, 3 lakhs, and then MIG1 and LIG, and then MIG1 and MIG2. And honestly, as Mr. Lakshminarayan said, PIN code A qualifies, PIN code B does not qualify. So I think we need to make it much more simpler so that it is more inclusive and more people need to come into it. Yes, I said yes, giving a subsidy, it's a good thing, but most of the people come into it because of the subsidy. The other part of it we need to think is the government basically, I believe, is targeting the so-called have-nots rather than the haves. Honestly, as housing finance industry, of course, we've lent out. We've given out, for example, from 2015-16 till 22-23, we've disbursed 46,000 crores under the Pradhan Mantri Awas Yojana 1, if I may call it that. But how much of it has really gone to the have-nots is again debatable, is again questionable. So the government has to have clear focus. I think it needs to be simplified, very, very simple. And I think the attempt should be really to get the have-nots into the scheme rather than the haves.
Right, right. Mr. Subramaniam, what is your view if the government comes up with the CLSS 2.0? What could be your suggestions about the contours?
So if the government does come up with the CLS 2.0, I think there are two things they need to take care of. One is, while I'm with Jairam on the fact that it's had a societal impact, but also the scheme has been bastardized a lot, in the sense that there are a lot of people who should not be getting the benefit, who've got the benefit. They do not necessarily belong to the EWS and the LIG segment of society, but they belong to the upper classes, and they still have got the benefit because of some rogue housing finance company trying to work around the maths. They need to plug that gap, otherwise half the money going into the haves, as he says, doesn't make sense at all. Two, they need to make it simple to claim and simple to administer as compared to what it is now. The amounts of subsidy, etc., that the government is, as he says, you can't advise the government, but you need to make it simple and make sure that it goes to the right people. And if there are any housing finance companies or banks trying to bastardize the scheme, which many of them are at this point in time, you need to come down hard upon them. I think that's something which the government must seriously implement.
Correct. The other issue is that since we are talking about affordable housing, let me ask very, very bluntly, is affordable housing a viable business proposition? Mr. Duraisamy, what is your view? Do you make enough margins from affordable housing?
You're asking barbers whether we all need haircuts. just to be clear what you're doing here.
Do I want a job or not? Is that what you're asking, right? So I get that. Yeah, no, absolutely. Affordable housing is a viable business, if you do this right. Nearly 70% of India lives outside of the urban cities. And, any houses that you build there within a reasonable construct and, with the definitional, change that, we can bring about, should certainly qualify for affordable housing. But the challenge is not actually in affordable housing. The challenge is in the supply side of the affordable housing as to how many affordable housing units are actually coming up that you can finance and what are the supply side issues that we need to address. What motivates a builder to build an affordable housing complex today versus building a lot of these not so affordable housing complex? It's a fundamental question that we need to address, because it is not that there are not HFCs or banks not willing to finance affordable housing today. It is just that the opportunities are limited in the bigger cities, in the outskirts of bigger cities. With these definitions, there are very limited, 20 lakh, 25 lakh houses that you will find, or even 35 lakh houses that you will find outskirts of even tier 2 cities, leave alone Mumbai, Delhi, and, Bangalore, etc. So that's the challenge that we are grappling with.
Right. Mr. Rege?
So I actually represent a company which has done 12 lakh home loans, bulk of them 1 to 1.5 lakh ticket size, right? So we've done very, very small ticket home loans. There is a lot of demand. The question that you asked, is it affordable? Now, the deeper you go in terms of your penetration to cater to this segment, right? As you go to, there are, I think, 800 districts in this country, right? Most housing finance companies will not have more than 300 branches. So we don't even cover most districts. Forget about talukas and going deeper. Because as you go deeper, yes, there are no builders, but there are customers who are willing to construct their house, right? They have a plot of land, they will construct, they might construct very affluent houses, maybe even take loans of 50 lakhs. But distribution, getting to that customer is expensive, right? You either need your own feet on street, and the entire ecosystem of DSAs, connectors, etc. does not exist. So you have seen several housing finance companies that classify them into two kind of models, right? To be successful in affordable housing, you either need economies of scale, so you have to be very large, like the likes of LIC or Piramal, or you need economies of scope, which is you identify a customer segment and really go after them. I'd call, let's say, Mahindra or Aptus or others who are really more deeper. They charge a much higher interest rate, but have specialized in that category. And you can make very good money in that segment as well.
Right. But tell us something, Mr. Subramaniam. Reach, I mean, we are talking about housing for all. Many companies operate in certain geographies. So do you think we really need to scale up our effort to ensure housing for all? I mean, how many finances reach in the tier 3, tier 4 centers?
So it's a bit of a related question to the question on whether affordable housing finance is profitable and scalable. I think just adding to his, I'm just addressing the previous question first before I get to this question. I think from an affordable housing perspective, every single affordable housing finance company in this country today is profitable. Scale, no scale, doesn't matter. A 3,000 crore AUM company is profitable. A 50,000 crore AUM housing finance company is profitable. Affordable housing finance companies lend at 14% to customers, borrow at 9% from the market, or 9.5%, depending on who they are. Almost all of them have GNPAs in the region of 1.2%. Credit cost in the region of 0.3%, 0.4%. Irrespective of the 19 in the cost that you spend, how can you not make money in the affordable housing finance space? I can't understand. Okay. So affordable housing finance, make no mistake, is the most profitable part of the housing finance business. You need to stay invested in it for at least 10 to 15 years to make it scalable, to make sure that you reap the benefits of what you have sown, and only then will something come out of it. Okay? Today, the problem with affordable housing finance company is scalability. That brings me to the tier 2, tier 3 cities.
I will just interrupt you for a minute. That was my question actually. Does it remain affordable if the interest rate is 14%, 15%?
Correct. So that's a question you will actually have to ask most of the housing finance company MDs who are sitting here, that why are they lending at 14% and 15% to customers who cannot afford 14% and 15%. But having said that, the ticket size is low. It's about 10 lakh, 11 lakhs. 1 or 2% here and there doesn't really move the needle on the EMI. But what moves the needle on the EMI is, instead of an 8 lakh loan, if you give him a 9.5 lakh loan, he's very happy because he can't put that 1.5 lakh together. He's willing to pay you that 1% extra. But having said that, I think there are some companies which do charge usurious rates of interest. I'm not naming those companies, but pretty much most of the affordable housing finance industry, which is in the 12 to 13.5%, I think they're doing quite okay.
Right.
As far as affordability is concerned.
Right, right. On the penetration issue, Mr. Sridharan, I mean, how do we ensure housing for all if we don't penetrate enough in those tier 3, tier 4 cities?
See, honestly, it's very hard. I'll tell you, it is not an easy problem to solve at all. Think about it this way. Mr. Adhikari's company has a couple of lakh crores of housing book, right? People who are purely focused on the affordable end of the market, where most of our loans are less than 20 lakhs or 25 lakhs or so, let's say the rest of us, can we continue in this current business model that we have, that we will only do small ticket kind of loans of 11 to 13% and continue to scale it? And can we ever get to 2 lakh crore ticket size or 2 lakh crore AUM size like Mr. Adhikari? I would say the answer is no, we cannot get there. It's not possible. The regulatory environment today and the and the way the costs and profitability stack up, it is not conducive for us to do, for us to become that big. I think who made the point? I think Lakshmi made the point about the regulator, or maybe you made the point about you made the point about regulator wanting, the NHB wanting to actually keep affordable housing players small, right? Essentially, the idea has become, hey, create small niche entities which will be profitable. I 100% with Ravi. All affordable housing companies are profitable. There is no unprofitable one. But keep them small. Essentially have a regulatory environment which has rules which are set up in such a way that it is impossible for you to actually scale it beyond a point, right? If you see what has happened in the last 1 year, a lot of, Mr. Parekh was here, the largest housing company in the country. He stopped remaining a housing finance company, right? They moved away from being a housing finance company. Another very large housing finance company is in the process of actually shifting out. They're not on the panel, so let me not name them. But very large housing finance company, 50,000 crores of balance sheet. They're moving away from being a housing finance company. Housing finance company, the concept of a large housing finance company is not going to exist in the future. Mr. Adhikari accepted. Right? That is the reality of where things are headed. So from a scale standpoint, we are not set up for that. We are not set up for pure affordable housing players getting to that kind of scale. For you to continue to deliver at that, for you to continue to scale that penetration into that market, either you're going to have 1,000 more housing finance companies, right? Or you're not going to have penetration at all. Unfortunately, that's the dire prediction I have.
There's also a bit of a structural issue in the way the housing finance companies are set up. If you look at most of the affordable housing finance companies, they're all PE-owned housing finance companies. Now, private equity-owned housing finance companies typically will have a 5 to 6 year horizon. You don't build businesses in 5 to 6 years. Don't build business to scale. So the moment you start off scaling up, costs hit you. When costs hit you, your profit takes a beating. When profit takes a beating, your parent will not be happy because valuations take a beating. So typically, affordable housing finance companies, the smaller ones, or even the mid-sized ones, struggle to find the balance between scaling up and profitability. That is where the problem starts for most of the affordable housing finance companies. So while I am with Jairam on most of the things, I still believe that affordable housing finance can be scaled up to a large scale. Because if you look at even companies like LIC, Housing Finance Company, a lot of the business does come from under 25 lakh customers. But there, you need time. You need time. You need the willingness to invest. For example, Shriram Finance Limited is a 200,000 crore company. Now,
Right.
that was not built in 1 year. It's a 50-year-old company. LIC Housing Finance is not a 5-year-old company. So similarly, you stay focused on that segment. Don't worry about the investments and profitability for some time and go about building your distribution. Only then can you scale up, and only then can your vision of housing for all be achieved. Till that time, affordable housing finance companies, I'm not saying all of them, most of them will remain small. How many affordable housing companies, finance companies are greater than even 10,000 crore today? I can name them on fingertips. Aadhar, Awas and us, Shriram Housing. Beyond that, there's no housing finance companies solely in the affordable housing space, which is larger than 10,000 crores. Isn't that a telling story?
That is the dichotomy which is happening. The market is crowded in the last few years. So many companies have come.
But the market is huge. You have 30,000, 30 crore households in this country. 35 lakh homes were bought.
Right.
So that's 1%. 99% is still a huge market for you to go after. But do we have the capacity, the investment capacity, and the tolerance to lower profit, which is required for us to go to tier 2, tier 3? And lastly, where do you find talent in tier 2, tier 3 to actually scale up? Nobody talks about this. But the fact is, the moment you go to tier 2, tier 3, there are 5 guys available. 5 companies chasing those 5 guys. How will you do business?
Right.
LIC has a huge network of agents they can actually leverage on. Nobody has that network.
So, Mr. Adhikari, what will your prescription, housing for all, how do we achieve that?
Well, for one, as Ravi and others have said, yes, we need to reach out. If I talk of my company, I'd be candid in admitting we have ignored the affordable housing. We are very comfortable lending to the blue-collared and the white-collared, the salaried, a person with income tax returns, somebody low risk. That's what we've done, right? Whereas, honestly, if you ask me, from what I hear Ravi and Shantanu and Lakshmi and even Jairam saying, it's a dream for me. Lending at 12%, 13% is a dream for me. My blended lending cost is 9.75. Boy, I wish I was in their shoes, bhai. They are operating at net interest margins of 5%
Because we
plus.
wish we were in your shoes.
They are operating
I
at
think you're
net
getting it
interest
wrong.
margins of 5% plus. I'm struggling to maintain a net interest margin of 3%.
We can
Right,
discuss
right.
co-lending opportunities after this.
So, since
Yes, I am a AAA rated company, but my blended cost of borrowing is 7.7%. And I have to fight with the SBIs and the ICICIs and the PNBs who are lending, whose cost of borrowing is 5%.
yeah,
blended,
of course,
blended.
there are certain regulatory
So
initiatives.
really, if you
required.
really want to get into the affordable class, I think the government has to give us some comfort. See, the NPA rules or regulations, right? 90 days is an NPA.
Right.
Whether it is an urban lending, whether it is a white collar lending, whether it is a risky affordable lending. Why can't I have a different set of rules for lending to the affordable segment? Number 2, builders. Abhinandan Lodha was here. Why would he invest in a affordable housing project? What is there in it for him?
Right.
He'd rather invest in a luxury or a semi-luxury. Last 3-4 years, there is a huge uptake in the inventory in the semi-luxury and luxury market. Affordable market, none of my top 15, 20 builders, they are leaving out the affordable market. If at all they are there, I think the Adanis have got it because of the SRA or SR, the slum rehabilitation schemes given by the government where they're
Yeah.
getting additional FSIs. Otherwise, the builders are not interested. There is a demand. 3 basic needs in India, as we say, roti, kapda and makan. And somebody said, we build a house not for one generation, I think 3 generations, 4 generations. So
Right.
everybody wants a house. Where is the supply?
Right.
Where is the supply?
Since we are completely run out of time, I will request very short closing remarks from the panelist. Mr. Adhikari has already said, housing for all, how we are going to achieve it? Mr. Ashwin.
For one, bhai, I'm going to get into affordable housing. So you 4 guys, you be careful. You be careful.
Okay, it's great to be in a jungle where there is no lion. So thanks for leaving something. I think supply side of the physical product, encouraging that, creating a regulatory environment that allows housing finance companies to scale, and creating a liabilities structure, a borrowing structure, which is supported by the government or government agencies in some way, which allows affordable housing finance companies to be able to provide truly affordable products to their customer base on the back of some of that refinance. Those would be some of my prescriptions.
Yes, yes, sir.
I'm slightly myopic in my vision. I'm more focused on Shriram Housing Finance and on what I need to do in the next 5 years in this company to take it to the next level.
Spoken like a true PE funded company.
My wish list from the government is one, a good CLSS scheme which covers a little bit of my credit cost and not particularly the interest subsidies alone. 2, a cheaper funding source and easier funding source for apart from NHB for housing finance companies. And lastly, you have a very interesting apprenticeship program which runs through the CSR programs for most of the companies. Launch something specific for housing finance, particularly in the rural areas, so that adds to it. And lastly, also give us infrastructure status. Give us something which we are able to go out and raise money easily from development finance institutions, raise money overseas, which attracts easy foreign capital into this country, and don't make it difficult for all that. If you do that, we will have the money, we will have the wherewithal, we will have the distribution and the capability to go out and fulfill all the affordable homes for all dream of the government.
Right. Mr. Rege, your closing remarks.
Yeah, so I think housing for all will happen. I would say it requires just better partnership between government and the financial services companies. A couple of enablers. One is, like we discussed, simplification and harmonization of the definition of affordable, and then making liquidity and cheaper capital available. And third, what you said, also understand that customers who are affordable and smaller ticket home loans, their cash flows are not the same as urban bank salaried people, right? So some dispensation, maybe even towards provisioning and NPA norms.
Correct. Mr. Durai Sami, the last word.
Yeah, just a couple of things. So I don't disagree with any of the suggestions that I've given, but whatever that the government chooses to implement on affordable housing, my wish is that they keep it simple, that it's easy to implement rather than just reading interpretations, that we will all have different views of what that regulation means, etc. And secondly, this arbitrage between affordable housing and what we call as prime housing isn't going to exist forever. So we need to find a way to create as Jairam also mentioned, a liability profile that helps us meet this criteria. Otherwise, as the spreads keep coming down, we'll need to find alternate ways of making money as affordable housing companies. So that's my 2 cents on this.
I think you want to add something, yeah.
Yeah, I have one last point, and that is that which Mr. Deepak Parekh also alluded to, which is that affordable housing finance companies go out, take the risk, lend to a customer who banks or even LIC Housing Finance won't lend to, but they stay with us for 6 months, 8 months, 9 months, 10 months, and then they get taken over by somebody because they are credit tested. There must be some protection for affordable housing finance companies against those takeovers. And as Mr. Parekh alluded to, whether it's 1 year, 2 year, 3 year protection, allow us to recover our money before we hand them over to somebody else. We take the risk, we test them for you, you reap the benefits. Life is not fair. So somewhere I think
I think this proposal is going to get like 5 votes out of 5.
Yeah. So I mean, our time is up for some time back. So it was a fascinating discussion. I mean, of course, the issues surrounding regulation and other dispensation, that's a discussion for another day. But clearly, there are certain challenges, to fulfill the vision of housing for all, as it is coming out from the discussion. And thank you so much, all the panelists, for your views. Please, a big round of applause.
Thank you, panel members and the moderator, for this discerning conversation. At this point, can I request Mr. Raj Singh, IMGC board member, to hand over a token of our appreciation to the panel members and our moderator. Ladies and gentlemen, quick takeaways from this part of the conversation is that bank needs to penetrate into tier 2 and 3 cities, since a lot of demand for housing finance is coming from these areas. Banks having to prioritize small ticket loans to make housing finance accessible and affordable for wider range of population, and affordable finance companies needing to find that fine balance between creating sustainable housing ecosystem and scaling up their operation to become big ticket players. Thank you so much to all the panel members and our moderator for this very engaging and exhilaratingly stimulating conversation. Ladies and gentlemen, as aptly stated by Albert Einstein, the ability to change and improve is a true sign of intelligence. Today, we explored the contours of future of housing finance, delving into the various nitty-gritties and complexities of our world with courage, curiosity, and a lot of compassion. Each conversation, every dialogue, every insight has been the testament to the power of immense collaboration, empathy, and resilience in navigating the challenges that lie ahead. As we draw the curtains on this remarkable event filled with thought-provoking speeches, engaging fireside chats, and enlightening panel discussions, I'm really filled with a lot of gratitude by the might of collective intelligence that we witness on stage, and a lot of inspiration. The wisdom shared by our esteemed speakers has ignited a new perspective, stirred deep reflections, and illuminated pathways towards progress and innovation. A big thank you to all the speakers, our panel members, and our engaged audience for making this event such a tremendous success. And on this note, I'm Ridhima Wali signing off.